there's quite a bit of buzz going around, isn't there, about Bitcoin possibly, well, smashing its all-time high.
Oh, yeah, definitely.
And some analysts are actually pointing to, May 2025 is the month that could really happen.
That's the prediction floating around, yeah, based on some recent analysis.
Right, so we've got some stuff to look at here. Things like on-chain metrics, who's actually buying, market mood.
Exactly.
Our sort of mission today, I guess, is to cut through that noise a bit, trying to figure out what's really driving this optimism.
Absolutely. It feels like a few different things are lining up, potentially. From, individual buyers right up to the big economic picture.
Like puzzle pieces.
Kind of like puzzle pieces, yeah. Seeing if they fit this prediction.
Okay, so let's dig into that. A big piece, it seems, is just who is buying Bitcoin right now. It's not just one group, is it?
No, that's right. Data from Glassnode looking at May, it shows pretty widespread buying, actually, across different wallet sizes. What's interesting is if you rewind just a bit to early April, the big accumulation push, that was mostly the really large players.
Oh, whales.
The whales, yeah. Wallets holding over, say, 10,000 Bitcoin.
But that changed, because that's where it gets interesting, right? If it broadened out.
Exactly. Throughout May, the data suggests that buying spread, it moved to wallets holding maybe 100 to 1,000 Bitcoin.
Okay.
And even smaller ones, too. Less than 100 Bitcoin. They started showing more buying activity.
You can see that in the charts.
Yeah, they have this trend accumulation score by cohort chart. You can sort of see the colors shifting through May, showing this widening base, more wallets joining in.
Okay, so it's not just the super wealthy loading up anymore. What does that broader buying tell us?
Yeah.
About sentiment?
Well, it suggests, a growing belief, maybe, across more types of investors. Plus, Santiment also reported that just the whale wallets, they added another, 83,105 Bitcoin in the last month or so.
Wow, that's a lot of Bitcoin being taken off the market.
It really is, a huge chunk.
And all this buying, this accumulation, it's actually starting to move the needle on market momentum.
It seems so. That kind of aggressive buying, sustained like that, it's apparently flipped the spot volume delta, turned it positive.
Okay, spot volume delta. Remind us quickly.
Yeah, think of it like a gauge. Is there more buying pressure or selling pressure right there on the exchanges? Positive means more buying interest than selling.
Which naturally pushes prices.
Upwards, generally.
Yep.
Yeah. And if it stays positive, it can kind of reinforce itself, signaling strength, maybe encouraging more buying.
Right. And Santiment took this data and made a pretty bold call, didn't they, about hitting $110,000.
They did. They suggested that if this kind of accumulation, especially from the big holders, keeps up, then breaking past $110 could be, feasible.
Interesting.
They also threw in something about the U.S.-China tariff pause maybe helping, though they didn't really dive deep into how that connects, maybe freeing up capital.
Okay. Maybe a side factor. So reason one, broad accumulation, flipping momentum positive. Got it. What's the second big driver here?
The second one is about supply. Specifically, Bitcoin's illiquid supply. It's hit a record high.
Record high. How much are we talking?
Around 14 million Bitcoin, which at current prices is well over $1.4 trillion worth. That's now classed as illiquid.
Illiquid. Okay, unpack that for us. What does that mean practically for Bitcoin?
Illiquid supply basically means Bitcoin held by long-term investors. People often call them HO dealers, right?
The diamond hands crowd.
Exactly. These are coins in wallets that show very little history of spending. The assumption is they're being held for the long haul with no immediate plan to sell. It really shows that long-term conviction.
Right, so a huge chunk of Bitcoin is just sitting tight, not available to buy easily.
Pretty much. It drastically reduces the amount of Bitcoin that's actually circulating and available for trading on exchanges day to day.
And the consequence of that, if demand picks up,
is basic supply and demand, really. If demand rises, but the readily available supply is smaller, it takes less buying pressure to push the price up. Makes breakouts easier.
Fewer sellers means buyers have a bigger impact.
Precisely. Even a modest increase in buying can move the price more significantly when supply is tight like this.
Okay, makes total sense. So we have broad accumulation and tight available supply. Now, what about the smaller guys? The retail investors, are they back in the game yet?
Well, signs are pointing towards a re-engagement, maybe not a huge wave of new retail just yet, but CryptoQuant's data is showing a rebound.
A rebound in what specifically?
In retail trading volume, particularly on Binance, which is, a huge exchange for retail. It had dipped, but now it seems to be picking back up.
So the everyday investors are kind of tentatively stepping back in. Is this looking like it might stick?
One of CryptoQuant's analysts, Carmelo Alamán, seems to think so. He noted that, it's not a massive spike, but the positive growth itself is encouraging. And he predicts that if this retail participation keeps growing, we'll probably see other metrics climb too. Things like active addresses, the UTXO count, new addresses, transfer volume.
All the signs of a healthier, more active network.
Exactly. More users, more transactions, not just price speculation. It suggests a more sustainable expansion if it continues.
Right, so it's not just about price, but actual usage growing too. That's important.
Definitely points towards a more robust trend.
Okay, now this next one connects Bitcoin to something completely different, the global M2 money supply. It sounds interesting.
Yeah, it's a macro angle. So M2 money supply, that's basically a measure of all the money circulating in major economies. Think Fed, ECB, Bank of Japan.
The big central banks.
Right. And some analysts, like Colin Talks Crypto, have pointed out a pretty strong correlation between the growth in this global M2 and Bitcoin's price movements.
A correlation? How strong are we talking?
Well, obviously, correlation isn't causation. We always have to say that. But historically, Bitcoin has often done well, sometimes really well, when global liquidity increases, when there's more money being created and sloshing around the system.
The idea being some of that new money finds its way into assets like Bitcoin.
That's the theory. More money chasing assets, and Bitcoin, especially with its fixed supply, could be seen as an attractive destination for some of that capital.
And this connection, it's been playing out recently.
According to Colin's analysis, he suggests the M2 growth pretty accurately mapped onto Bitcoin's run-up from around $76,000 to over $105,000, starting back on April 8th.
Wow.
And based on that continuing trend, he's actually put out a forecast. He thinks Bitcoin could hit $120,000, maybe even more, by the end of May if this relationship holds.
But hang on, doesn't M2 correlate with lots of assets like stocks? What makes the Bitcoin link special, if anything?
That's a fair question. Some would argue Bitcoin's provably finite supply makes it uniquely sensitive. Unlike stocks, where companies can issue more shares or fiat currency, which can be printed, Bitcoin's supply schedule is fixed. So an increase in overall money supply might impact it differently or more dramatically.
Interesting point. So if central banks kind of keep the taps open, relatively speaking, that could continue to fuel Bitcoin.
That's the argument, essentially. Given the current macro environment, if money supply keeps expanding, it could act as a significant tailwind for Bitcoin.
Okay, fascinating link there.
Yeah.
Right, the fifth and final reason, this one's about market sentiment, using prediction markets.
Yeah, specifically Polymarket. It's one of those platforms where people can bet on future events happening.
Like political elections or...
Exactly, all sorts of things. And right now, the odds on Polymarket for Bitcoin hitting a new all-time high in May have jumped. Quite dramatically, actually.
Jump from what to what?
It was apparently down around 11% probability not long ago, and now it's sitting around 51%.
Whoa, from 11 to 51%. That's a huge shift in confidence.
It is. Now, obviously, these markets aren't crystal balls. They've been wrong before. We saw similar spikes before corrections in the past.
Sure, it's crowd sentiment, not a guarantee.
Exactly. But it does show that people trading on that platform, putting real money down, are becoming much more optimistic about a new high happening very soon.
And how does that optimism reflected in betting markets actually influence the real price? It's not direct buying, right?
No, not direct buying, but it can feed into that FOMO effect we sometimes see, fear of missing out.
Ah, yes, FOMO.
If more people see the odds increasing and start believing a breakout is imminent, it can encourage those sit on the sidelines to jump in, which does create real buying pressure. It can become a bit self-fulfilling.
The belief itself starts driving the action. Makes sense. And we should also remember Bitcoin's already hit new highs in some places, right?
Yeah, that's a really important piece of context. In countries like, say, Turkey or Argentina, where their local currencies have fallen sharply against the dollar, Bitcoin, when priced in lira or pesos, has already blown past its previous records. It highlights how currency devaluation and macro factors play a huge role in how Bitcoin's value is perceived globally.
And this bullishness isn't just in prediction markets. We're still seeing big long-term calls from known figures too.
Oh, yeah. You still have people like Tim Draper sticking to really high targets, like $250,000 by the end of 2025.
Still holding that one.
Seems so. And even more mainstream players, like Standard Chartered Bank, put out forecasts suggesting $120,000 was possible just in Q2 of this year. So that kind of talk definitely adds to the overall bullish mood music.
Okay, so let's quickly tie this all together. 5 key things potentially pushing Bitcoin towards a new high in May 2025. We've got number 1, widespread accumulation from whales down to smaller fish.
Right, flipping that volume delta positive.
Number 2, record amounts of Bitcoin locked away via liquid supply, making the available pool smaller.
Tightening the supply side.
3, retail investors starting to come back, showing renewed interest and activity.
Signs of life there, yeah.
4, that interesting correlation with global money supply, the M2 factor.
For potential macro tailwind.
And 5, rising odds on prediction markets reflecting growing confidence, maybe fueling some FOMO.
Yeah, the sentiment turning positive. It's quite a mix of factors.
It really is. It paints a pretty optimistic picture when you lay it all out like
Well,
that.
it does. Each angle gives a slightly different view, but they seem to be, for now at least, pointing in a similar direction.
So, thinking about all this,
Yeah.
here's something for you, the listener, to chew on. Given these factors, what kind of news or event would really supercharge this trend in the next few weeks? What would make you think, okay, this is definitely happening?
Or conversely, what could derail it? What potential surprise or shift could suddenly undermine this optimism we're seeing build?
Yeah, good point. Things to watch would be those accumulation trends. Do they continue? Does illiquid supply stay high? Does retail really ramp up? Any sudden shifts in central bank talk?
And just that general market vibe, the sentiment, it can change quickly.
Yeah, absolutely. It's definitely shaping up to be a very interesting period to watch for Bitcoin.